Hi, everybody, and welcome to the June 2024 Economic and Market Update presented by Commonwealth Financial Network. My name is Brad McMillan, and I'm Commonwealth's Chief Investment Officer. May was a good month for financial markets, with most stock indices up from 3 to 6%. This was great news following April's pullbacks, and we saw the S&P 500 and Nasdaq both reach new all-time highs. The story was similar for developed markets, up by almost 4%, but emerging markets lagged with only a small gain, although even here, a win's a win. Bonds also did well as falling interest rates helped support their prices. The market rally was sparked by signs of slowing but steady economic growth. The April employment report with 175,000 new jobs was still strong, but was a decrease from the stronger than expected hiring so far this year. That report, along with modest declines in consumer and business confidence, helped calm investor concerns about inflation and took interest rates down a bit. On top of the easing economic conditions, market fundamentals were also solid. Companies continued to show strong earnings growth, with the average growth rate of the S&P 500 coming in at 7.8%, more than double the expected level. This is a good sign for long-term investors as fundamentals ultimately drive returns, and a steady economy with rising earnings provides a solid foundation for the market. And that foundation is a good thing, as the risks going forward are real. While inflation is still the most pressing one, there are others to watch for. We're likely to see ramped up political uncertainty as we approach the federal elections, for example. We'll also need to keep an eye on the effects of the current wars in Ukraine and the Middle East on supply chains and on the slowdown in China. And of course, there are also the unknown risks that could pop up at any time. But despite all that, we continue to be in a good place. With slower but healthier economic growth and with solid market fundamentals, the stage is set for continued expansion. While we may well face speed bumps along the way, the most likely path forward is for continued growth and market appreciation. And that's a good way to start the summer. That's it for this month's update. Thanks for watching. I'll be back next month to talk with you again, but until then, be sure to check my blog, The Independent Market Observer, for more timely comments. Stay safe, stay sane, and stay healthy. And have a great summer.